So it's been 1 week since I launched my very own TSLY fund, and I generated $5.53 in dividends in just the first week, which is 1.89% return on capital. And if I continue at that rate, that is around 98% return in just 1 year. So if you guys are interested in learning more about this challenge in this series, I strongly recommend that you smash that like button and don't forget to subscribe. And again, if you are brand new and want to learn more about synthetic options and the covered call strategy and how I built this TSLY fund, go check out the pinned comment or in the description. A link to the first video will be there, which goes into it in a bit more detail. So in this video, what I want to focus on is the trades that I've created. We're going to look at the P&L, the balances, all these good things. And again, touch on how much money I've made and what is in store for week 2. Now, the first thing to showcase is I can understand why that the yieldmax funds have additional or a very high expense ratio of just under 1%, because you can see here that I've placed 12 trades this week. And again, Tesla's been going up and Tesla's been going down, which is why I've been a bit more active with this particular positioning for this week to maximize the income. And you'll see why I've done this when we go into the trades and we look at the TSLY chart, or the TSLY chart rather. If we go back and have a look at what we did on the 22nd, we created our synthetic option for us to simulate controlling 100 shares of stock. And again, I'm not going to go into it in this video. Check out the pinned comment to understand what that is. But effectively, you are buying a call and selling a put at the exact same strike to simulate 100 shares of stock. I've got one contract, so that simulates 100 shares. And then what we do is we sell a covered call above the strike price. So again, our synthetic was at 256.67. We sold the 260, and the aim is of that $355 that we sold. That's the premium we want to capture and pay ourselves in dividends every single week. And it started pretty well. So we go to where we were on the 22nd. So it was around this area here where I did the 250, forget myself these days, the 256. And the 256 is around this area here. And you can see here that on the 27th, Tesla skyrocketed up here above my call strike of 260, which was here. So with any covered call strategy, when the price goes above your covered call strike, in my case, the 260, I capped my gain. I can't make any more than 260. And I felt to myself when it was around, the 262 area on the 7th, I decided to close down the overall positions. So that's the synthetic and the covered call, and re-establish the position. So you can see here with the synthetic, when I closed it, we made $642 in appreciation of the stock, in inverted commas, through the synthetic long stock option. And my covered call, because I sold it around the 260, 262 mark, my covered call was actually more expensive to buy back, because the covered call loses money the further it goes past that strike. So that was in a negative, but my synthetic long was in a positive. So I initially sold for $355, but I generated $554 in that particular time, which was absolutely fantastic. So I captured the full appreciation plus the covered call income through the synthetic. So then at the same time, I then reestablished the position at 262.50. So now 262.50 is where my synthetic is, or where I quote unquote bought 100 shares of stock. And then I sold the 265 call for $198, again expiring on the 29th of December. So this is what I like to call it double dipping, where I'm trying to generate more premium than I initially did, because I initially sold it for $355. And if I get the 198, that's 553, which is coincidentally is what you see over here. So we'll go into how we get to that 553. Then what you can see is Tesla topped out in 265-ish, and Tesla continues to decline straight away from there. So that unfortunately then made me lose money because, again, you've got with the synthetic option, for every dollar Tesla rises, you make $1. For every dollar Tesla goes down, you lose $1. So it was good for my covered call because it was nowhere near the 265 strike when I sold it on the 29th. So the 29th again was on the Friday where it got to a low of 248, right? Nowhere near my 265 call strike. So I was able to buy that back for $2, and therefore recognizing pretty much all the premium once you take into account commissions of $194. Now I had the choice here of either reopening the covered call expiring for next week or January the 5th at my cost basis of $262.50, but the premium was only around $100 to $150. So what I decided to do is also close the synthetic at the same time. So we closed out the synthetic at a loss of $1,400, and then obviously that covered call premium helped me out slightly of minus $1,112. So I re-established the synthetic at $250. Tesla's trading at $248. So we're $2 down slightly. And then we sold the 255 call expiring next Friday, January the 5th. And we made $410 in premium, or that's what we sold at the moment. So what we really need is for Tesla to go from 248 where it's trading in between 250 to 255. So if it gets to 250, 252 by next Friday, I will probably roll at the same strike and keep the synthetic open at 250. So hopefully that makes sense. You might need to pause the video and go through that again, but hopefully you can see now how the management of the yieldmax TSLY fund compared to what I'm doing is very similar. Again, it's down to personal preference of whether or not you close the synthetic as well and you have an unrealized loss of $1,400 and wait for another week for Tesla to potentially rally again, or you just close and reestablish. For me, I prefer to close and reestablish only because I'm here to maximize the premium and income. Because if you're looking at it from a week-to-week basis, that if you expect stocks over the long term to go up, you're going to have more up weeks than you are going to have down weeks. So that's just the way I kind of look at it from that perspective. If we have a look overall here in the realized P&L, even though we took a realized loss of $1,413, earlier in the week, we did take a realized gain of $642. So that makes the realized loss for the synthetic part of this strategy of $772. And because we haven't realized the 410 at the moment, we've only realized the 98, the minus 98 and the plus 194. We've got $96 in positive realized gains for the covered call. So when you kind of net those two out, we then have a combined P&L at the moment of minus $675, which if you take now the actual balance of the portfolio is down to 29,325, which is that minus 675, which again is a 2% down on overall capital, which this is very similar to kind of how yieldmax funds work, because you take all the downside risk and you cap your upside. The NAV, or in my case, the 30,000 NAV that I've got here, will kind of erode over time because of the nature of how you're setting this up. But hopefully, again, we have more positive weeks than down weeks, which again will make that erosion a lot smaller or potentially even kind of stay flat. Now, when we have a look at premium or how much I'm going to be paying myself as out of this fund, is even though we didn't realize the 355 in here at minus 98, we did realize it here. So what I've said, and I've looked at the perspectives of how the yieldmax fund works, is they look to pay out the extrinsic value or the premium of their out the money calls. So even though I didn't really make it through this covered call, I made it through the synthetic appreciation, I still classify it as $553 that I sold, which is the 355 and the 198. So I sold $553, and I've realized, if I look at how much I've actually realized in terms of gain, is $642. So I'm quite happy to say that I'm paying myself the extrinsic portion of that covered call for the two covered calls I sold in the first week. So that's $553 or $5.53 per share, which gives me that $1.89 overall for the first week of this fund. Now, if we have a look at where Tesla is sitting at the moment, if we probably zoom it out to a 4-hour, and for those who know, I like to look at pivot points where the purple is the weekly pivots and the orange is the monthly pivot. So the first thing I like to look at is that it has hit its December pivot, which is good. The thing which for me is a concern at the moment, we do have a missed weekly from the week before, which is sitting at around the 245 mark. So I've got every intention that price will want to go hit this missed pivot and test the 245 level probably next week. So again, I do feel that this is quite an aggressive sell-off when you look at it on the 4-hour. I'm expecting it to at least touch the 245 before it may potentially flatline or potentially go in and start to make another push higher. So that's kind of my view. I think there's still some more downside to come in, which again, why I decided to re-establish this position to the 250 synthetic as opposed to keep it to the 262.50. Because I do feel that Tesla probably is not going to get to 262.50 this week, but it might stay at 250, for example, which again will help me realize this 410 and therefore roll again at the 255 next week. Now, if Tesla does fall to the 245, especially in the early parts of the Tuesday, Wednesday next week, again, I will look to roll down this call to the 250 to bring in more premium. And again, that's the active nature of this, of trying to double dip, as I mentioned before, trying to capture as much premium or maximize the extrinsic value premium that we can pay ourselves in dividend. So again, I hope that makes sense. I really hope you've enjoyed this video. Again, make sure you like and subscribe. And if you are interested in learning how to trade options, or how I like to predominantly sell options, which is my main trading strategy, there are a number of videos on this channel. And again, if you are interested in any one-to-one coaching to learn how to do synthetics or to sell options, again, check out my coaching course and get one-to-one coaching from me. And I shall see you guys in the next video.